Hello everyone and welcome to our channel. Today we're diving into the exciting world of stocks and exploring how they work right here in India. If you have ever wondered about the process of buying, selling and investing in stocks, you're in the right place. But remember, while we strive to provide accurate and up-to-date information, the content in this video is for educational purposes only and not any financial advice. Investing in stock market subjects to market risks. Please invest your hard-earned money after proper analysis and not on someone else's advice. Let's jump right in. Before we delve into the nitty-gritty, let's get a solid grasp of what the Indian stock market actually is. Simply put, the stock market is a place where companies issue shares to raise capital, which the company uses for growth, expansion, or for the CEO's family vacation and a private jet. And individuals like you and me can buy a piece of those companies. In India, we have two major stock exchanges, the National Stock Exchange, commonly known as the NSE, and the Bombay Stock Exchange or BSE. These exchanges serve as a platform where trading takes place, connecting buyers and sellers. But who keeps a watchful eye over all these activities? That's where the Securities and Exchange Board of India or the SEBI comes in. SEBI acts as the watchdog of the Indian securities market, ensuring transparency, fairness and investor protection. Now, let's talk about what exactly a stock is. A stock, also known as an equity share, represents ownership in a company. When you own a stock, you become a shareholder, entitled to a proportion of the company's profits and also losses, by the way. Companies issue stocks to raise funds for growth and expansion, and as a shareholder, you are entitled to a share of the company's profits. This could come in form of dividends, which are essentially a bonus for being a part owner. Alright, it's time to understand how stocks are traded here. Every company listed on the stock exchange has a unique stock symbol or ticker symbol. This is like company's identification code. When you want to buy or sell a stock, you place an order through a broker. Although nowadays you can buy and sell stocks through mobile applications like Kite by Zerodha, Upstocks, Grow, etc. There are different types of orders like market orders and limit orders. Market orders are executed at current market price, while limit orders allow you to specify the price at which you're willing to trade. Trading doesn't happen around the clock. The Indian stock market has specific trading hours. It typically starts in the morning and concludes in the afternoon. But there's also a pre-opening session where orders are matched before the market officially opens. Let's talk about why people invest in stocks. Investing in stocks can potentially lead to capital appreciation, which means the value of your investment can grow over time. As the company grows and thrives, so does the value of your investment. However, with great potential comes some risks. The stock market can be quite volatile, and the value of stocks can go up and down due to various factors, including economic conditions, company performance, and market sentiments, and various other factors. So it's important to be prepared for both gains and losses. It's a good practice to invest as much as you can afford to lose. There are different types of investors in the stock market. You've got retail investors like you and me, as well as institutional investors like mutual funds, pension funds, and insurance companies. Before diving in, it's crucial to set clear investment goals. Are you looking for short-term gains or long-term wealth accumulation? Knowing your goals will help you shape your investment strategy. Comment below what your goals are. When choosing stocks to invest in, it's not a guessing game. It's crucial to choose your stocks wisely. Fundamental analysis and technical analysis are two approaches that can guide your decisions. Fundamental analysis involves assessing a company's financial health. Look at key metrics like earning per share, price to earning ratio, and debt to equity ratio. This gives you a snapshot of how well the company is performing. On the other hand, technical analysis involves studying stock price charts and patterns. This can help you understand potential trends and make more informed decisions. Before we head forward in the video, make sure to hit that subscribe button and like the video if you're enjoying. In the Indian stock market, SEBI, that is the Securities and Exchange Board of India, plays a pivotal role in ensuring investor protection. This regulatory authority ensures that the Indian stock market operates smoothly, transparently, and fairly. It sets rules and regulations to maintain market integrity and safeguard the interests of investors. SEBI also mandates that company provides accurate and timely information to the public. This transparency ensures that investors have access to all the information they need to make informed decisions. So, how do you get started? Well, to trade stocks in India, you need a demat account. This account holds all your electronic securities in one place, making it easy to buy and sell stocks online. There are various online trading platforms available offered by brokerage firms. These platforms allow you to place your buy and sell orders with just a few clicks. That's a wrap on our journey through the world of stocks in India. We've covered everything from the basic of ownership to the intricacies of trading. Remember, investing in stocks can be a rewarding venture, but it's important to do your research, stay informed, and make decisions that align with your financial goals. If you found this video helpful, don't forget to give it a thumbs up and subscribe to our channel for more insightful content. Have questions or thoughts? Drop them in the comments below. Thanks for tuning in, and until next time, happy investing.